There are different terms. There are different companies that have very really on those programs read the fine prints because there are nuances for each one. It's not like a 30-year fixed mortgage. Some of them are what's called interest only, where you only require to pay the interest, and some of them require interest plus principal, even on the line of credit. So really pay attention.
Welcome to another exciting episode of Building Connections Doral Talks podcast. I'm your host, Betty Gonzalez, and today we have a very special guest joining us again, Kristel Caniquitte. She's not your average mortgage lender. Kristel is a true expert specialist when it comes to thinking outside of the box in the world of real estate. She's also a recognized divorce specialist, making her unique qualified to help navigate the complex waters of property ownership during challenging life transitions. And in today's episode, we're going to dive into a different type of way to buy houses, one that is out of that oven, as she just learned this class and is eager to show it and share it with our audience. Good morning, Kristel. Thank you for coming this morning.
Audience. How are you all?
You are like a loyal guest. So, but for those of them that do not know anything about you, could you just tell them just a little bit about yourself and then tell us about this great new program?
Of course. So thank you again for having me. I love being asked to share information to empower potential buyers, but really just being a conversation either of divorce, life transitions. I actually believe life is always a transition. It could be from first-time home buyer to buying the next home, or to renting to buying your first, whatever life transition is, because it's challenging. It's like, ooh, it's the unknown, right? So I dwell, and just even for myself personally, in how do I best work in life transition, in uncertainty? And this current market is very uncertain of interest rates. We hear about it going up. We hear about it going down. We hear about it going to be changing. It is always changing, and it's a lot of it out of our control. Like, how do we know, besides having that crystal ball and I think, or my opinion? So when I come to podcasts, it's not so much to share opinions. It's more to share facts. It's more to share possibilities and empowering from the fear that's being created to what we can control. So I'm Kristel Caniquitte, and I'm with CMG Home Loans, and I've been in the mortgage industry for over 25 years. Started in Georgia, moved to Florida, so I'm licensed in both states. However, the company is national, so wherever you're listening this from, just know that we can help you. I can connect you with someone. And I know this podcast already is really focusing on providing information and tools and awareness to the Doral area. So just want to let you know, we were actually, before the call, she was saying how she is expanding, right? So yes, we have our licenses. Yes, we have our hats that we carry for our careers. And I love that Betty and I, we love expansion. We love empowering people based on where they are and providing information. So let's go right into line of credit. So I want to actually share my screen as I'm going to make sure that I got the correct one available there. And before I actually do that, why a line of credit? You could be someone looking to buy your next home and don't want to really touch your current mortgage, right? You don't want to sell your house. Let me state this differently. Let me use the scenario of, I have a house right now with a low interest rate, 3%, and I don't want to touch it. But have you thought about keeping that home as a rental? Because your payment being low, you can now have a cash flow and using it as an investment property and buy your next home. So yeah, but Kristel, unless I sell the house, I'm not going to be able to buy the next house because I don't have the money saved. Have you seen how much the eggs are costing? I've been spending money on groceries, right? So we have access to using the equity in your home without selling it and investing in other real estate. Or you love your house and you want to buy now some properties that are coming to the market. So you don't have to let go of your current house, but you want to have money in your pocket to either flip, to either have a project that is to your heart, a passion that you had. Whatever your goal is, I'm here to listen and help you get access to that money using your equity without touching your first mortgage. That's the first thing people are afraid of is, yes, but I don't want to touch my first mortgage. It's like they panic. We don't have to do that. So I'm going to share my screen because a lot of people don't know how it's calculated. And I'm just going to use a basic calculator.
So Kristel, while you get the screen up. So what I want to see if I understood it correctly. Yep. So right now, a lot of people have a lot of equity. What does equity really means? It means that you have a lot of money for worth of appreciation in your property. So if you bought your property 3 or 4, even 5 years ago, as much as everything went up in price, you might have yourself $200, $300, even $400,000 worth of money just locked in your property, right? So this is a way to release these funds without having to get rid of your property or your mortgage that is locked in at a really good interest rate, right?
Yep.
Okay. Yep. So now that I have this clear on my head, now let's continue.
And that's why I love that, because it's a great transition to explain how we're calculating that equity. So Betty, how much on average the properties are in Doral?
Well, right now it's $895,000 for single family home. And now, mind you, this is the medium, so that means that it could be lower or higher depending on the property. Right. But yes, it's up there.
Yeah. So let's say the property is worth $895,000. If you were to sell the house, you end up paying commission. What's left, not paying your mortgage, that's how much you'll be netting. When you're doing a line of credit and you're keeping your current first mortgage, we'll take the value of your home and let's multiply that by 80%. So 80% is the maximum total financing. There are programs that go up to 85. For right now, I'm just going to use 80% because most of them would be most favorable at that percentage. So we're going to take 80% of the value of your home. It's going to be your max total debt. So that's going to be $716,000. But from that amount, we're going to go ahead and deduct, so minus what your mortgage is, because you're not selling it, right? So we're keeping that first mortgage. We're not refinancing the first, we're keeping that one. So now the HELOC, line of credit, second mortgage, all those are the same. Basically, they are second lien. So they come after your first mortgage. So let's assume that your debt on that is $350,000. So now you have access to $366,000. That doesn't mean you have to use all that, because there will be a payment on it, right? When you sell, you get the money, there's no payments. You have that money. When you're doing a line of credits, then yes, now you do have a new payment. So you want to make sure that you are utilizing, and plus of course you have to qualify for that total new debt. That's the amount that you could potentially access. That's what we call accessing the equity from the line of credit. That line of credit, so let's say is that $350. We're not touching your first mortgage, that was $350. Your payment is based on what you currently have. We're now adding a new debt. That new debt, the payment is going to be based on that. There are different terms, 15 years, 30-year term. The longer the term, the lower the payment. Okay. Most of those programs do not have a prepayment penalty. In reality, it works like a credit card when you do a HELOC, meaning line of credit, right? Versus the second mortgage, that's like an actual mortgage where you are paying, and then when it's done, it's done. The beauty of the HELOC is that, let's say you took that loan of $350 and you went ahead and bought a home cash, right? And you're going to flip it. Flip it meaning you buy it, you make some improvements, and then you sell it. You want to go ahead and pay that debt back. So you can take the money that you gained from selling that home and put it back into your line of credit. Now you don't make a payment on that loan. So the debt is paid like a credit card. You pay off your credit card, there's no payment. You use the credit card, then there's a payment. Now, I keep you referring to, if you buy another house, it's not just for that. This is just an idea because we are in real estate, but you can use it for other projects. Now, somebody else, do you want to ask a question before
No, I wanted to clarify so the people kind of like, might have questions. So HELOC is short for home equity line of credit, right? So it's very different than a loan. A loan is, you get a loan, right? You get a $10,000 loan, you have to pay back. You get the whole money up front. A HELOC is a line of credit, kind of like Canicquitte's. Kind of like Kristel is saying about like a credit card. You have this in the bank until you need it. So like if it's a $10,000 credit card, you have access to that line of credit in a credit card. But in this case, it will be on your property in a bank account there for when you're ready to use it. And you only pay interest on the money that you use when you use it. And if you're not using it, it stays there until the way. So if you do want it for short term, kind of like Kristel is talking about, for an investment property, and you're going to buy a property, refinance it later after you fix it, and then take the money out and put it back into the line of credit, you can rinse and repeat, right?
Yes, you got it. Yes. One thing I want to, this is more for detail, but keep in mind, if you get a loan, let's say of $350,000, a lot of the banks or lenders like myself, we will ask for a certain amount to be taken out when you're signing. So you can always put that money back, but upfront, there's usually a percentage of that money that you asked for that you have to take. And then you can use it or not use it and pay it back. Yes, because there's no prepayment penalty. And you are totally right. With that home line of credit, whatever you use is what you're paying on. When you're getting a second mortgage, then that's different because your payment is fixed and you basically pay off that loan. You can't really access it back. There are different terms. There are different companies that have really on those programs, read the fine prints because there are nuances for each one. It's not like a 30-year fixed mortgage. Some of them are what's called interest only, where you only require to pay the interest, and some of them require interest plus principal, even on the line of credit. So really pay attention. Those are variable rates, right? So don't get scared by that. It's like a credit card. You're not necessarily using this as to buy your home and this is your only mortgage. I would personally discourage that because the rates are better than a line of credit. A second mortgage is a second lien. So that means that lender, if anything were to happen where you can't pay for it and there's a foreclosure, they're the second one to get that money. So the risk is higher for that lender. The risk is higher for that particular loan. So the higher the risk, the higher the interest rate. Okay.
Right.
Something that I want to add, because a lot of W-2 employees, so if you work for a company, you usually will qualify by providing pay stubs and W-2s. But a lot of self-employed who do not report as much as needed to qualify for a home because of the ability to have a lot of deductions, a lot of those programs they do not qualify for because what they show in their taxes is not enough. So there is a new program, and that's what you were alluding to at the beginning, is that we just got. And it's a program where we can now use for self-employed your bank statements. So we'll take 12 months of your business bank statements. We will average the deposits and take a percentage of that to calculate the income. So I've done a lot of those loans for the first loan, but a lot of those clients did not have an option to get a line of credit, even though they have the equity in their home. So this program coming into the market is really helpful for those who are self-employed. And yes, they make the money, but they have ability to deduct so much on the taxes that we can't use them or they don't qualify. So now this program is really freeing this opportunity for people. Now, keep in mind, it is requiring a higher credit score. You're looking at about a 720 credit score, right? So credit is always, whenever we start to not show documentation like tax returns, then we have to compensate with something stronger, which is going to be basically your credit score. So the minimum credit score for this program is 720. It's based on bank statements. So this is for self-employed or someone who's 1099. Often I hear clients who are 1099 who don't consider themselves self-employed. Well, that is some form of self-employment because you're not being you're deducting your taxes at the end of the year. Do you have any questions on that?
No, I'm just writing down. So right now, some of the requirements to be able to qualify. So for the credit score, it has to be at least 720 because it's a high risks and they're not, taking into account that you don't have per se like the income for a W-2 is more secure. Correct. And then also you will use the bank statement instead of the W-2s, and then either bank statement 1099 and then at least 12 months of that.
That's right.
Right, because a lot of people kind of like a lot of the truck drivers or, those are one of the ones that suffer the most. They get paid very well, but a lot of times they want 2 years. So now you're talking about they can do this for 12 months instead of 2 years.
Correct. Yes. Now, this program does require the person to be self-employed for 2 years, but we're only showing the income for 1 year. And because we're talking about that, I wanted just a quick parenthesis. There is actually a program that is for self-employment for 1 year. That's a whole new program too. We're not going to talk about this right now.
Okay, we'll do that. We'll do that the next
another time.
Yes.
Yes.
Because you're coming back.
Yes, anytime. Something else that I want to add. So this is not only for your primary residence. This can be also used, let's say you have a property in a different state, like a second home or vacation, or somebody who lives in a different state, but they have their vacation home in Doral, in Florida, and they want to access the equity because the value went up higher there, let's say. That's also possible on second home and investment properties, right?
Okay,
a lot of line
like
of credit is only on primary.
Like I have 4 properties.
Yep.
In Texas and in Alabama. So if I wanted to kind of get some of the equity, that could apply to me.
Correct.
To be able to continue to invest. Okay, that's
right.
really good to know.
Very good. And then also it's only for US citizens and green card holders. So if you have a work permit, it's not going to work.
Okay, so now, that's another requirement. So
yes, US citizen and permanent resident.
Yeah, green card holders.
Yes. I think that's it for this program.
So let me ask you, so how long would it take for that? Let's say that I say, you know what, Kristel, I think I want to go ahead and tap into my equity. So from beginning to end, how long do you think this process will take somebody? Is it as long as when you're buying a property, or is this different?
This particular one will take about 20 days. And the reason is because it's not like some of and that's the one I had to pause because I wanted to share about this one. So there are some line of credits that are easy process. In 5 minutes, you know the answer. This is different because we now have to calculate your tax. We have to review 12 months of your bank statements. We have to make sure, your self-employment. We actually do an appraisal or a drive-by. So this is an actual loan that's being done. So the process is longer. Okay. Not all line of credits are like that. I have another one, which honestly, that would be my first stop for any client. Let's see if you qualify with this program. And it's really just computer generated. So I don't manually calculate the income. You basically fill out your information. It does an automatic value of the property based on the surrounding area and what the system gives. So it's not a full appraisal. It's like what you guys call a CMA, but the computer is generating, this is your address, this is how much we will give for the property. So if you don't agree, it's almost like I can't do anything. We just can't use that program. The other thing is for income. Let's say you are self-employed. This is not specific for self-employed, but you say, I make $10,000 a month. You attach your bank statements. When I see attach, if you are banking online, the system will ask you to basically connect your banking information. It will calculate the income, and it's not going to ask for pay stubs. It's not going to ask for tax returns. It's going to look at your average deposits. So I've had clients who are self-employed. We did not use the bank statement program like the one I just shared. It just calculated, okay, there's an average of deposits. It's enough to qualify, and they got their money. But it's only personal bank statements. It's not business, right? So this program, after filling out the information, it tells you yes or no. So and then within 5 days, you can get your money. So there are different programs.
So what I'm gathering, Kristel, is like there's a plethora of different ways to be able to qualify for a loan. And what I want our listeners and our viewers to get right now to know is that unless you talk to a lender like Kristel, you will never know, because maybe that happens to you. But I have a lot of family members that always talking to me about real estate, because obviously I'm in real estate and they show me properties like I understand what you're saying. I mean, I know exactly what you need to do, but at the end of the day, I'm not a lender. And if you're not willing to go through the process, you will never know what programs are out there that could help you and benefit you and actually tell you what you can qualify for. So that is like the very first step that I don't understand. Maybe you can help me understand what people are so afraid of taking. What do you think that is?
It's a fear of rejection. It's the fear of being told no. So it's almost like that's the dream. It's not almost like, it's the dream of having that home and being crushed by, sorry, you don't qualify. Because sometimes lenders will just tell their clients, sorry, I can't help you, come back when you're ready, or when you make more, or when your credit is fixed, but they don't give them a guidance. So when I do a pre-qualification or pre-approval with a client, I actually do what's called a credit simulation. So if your credit is not where it needs to be, I'm giving you tools to get yourself ready. I don't fix credit. I'm not a credit repair company, but I give you tools. If your income, it's not really based on the market in Doral, you don't make the money. It's like, well, we may need to make some adjustments, look in a different area. Or you know what? You have this amazing master's degree. You might want to go ahead and start stepping into your job that really will pay you what you need. So that's because people don't like to be uncomfortable in decisions they're going to have to make. So it's almost like we have to counsel them in if this is your dream, you have to be focused and you have to take a leap of faith, but also, like you said, speak with experts and be ready for not now, maybe not now, but when you take those steps, there's a higher possibility. So it's helping people go through that life transition of fear and empowering them.
That makes a lot of sense, because a lot of people don't want to get a no or rejected or feel that they're not good enough. Yes. Okay, so the reason I'm asking you this is so I could do a better job explaining to my clients, even though I think I am pretty good. Mm-hmm. And I have clients that have gone through the process. I said, you need to trust me, go and talk, they will guide you. Not all, like you say, not all lenders will do this, but most lenders will tell you, like, this is exactly what you will need to do to raise your score. Or there's another thing, people believe that they know what they need to do. Like, I'm gonna pay this, I'm gonna pay that. Like, no, you don't know if you need to close a credit card, most likely never. You talk to your lenders, like yourself, you can tell them what they need to do instead. Mm-hmm. Don't close this card, or don't pay this off, maybe pay this off, right? You actually guide them through that process.
Correct, yeah. I think it's the fear of being judged, fear of looking in the mirror. It's really what's holding.
Got you. One thing that's also that drives me crazy, it's that they tell me, I don't want my credit to be poor. And I was like, well, guess what you work all of this year for? To be able to use that credit. It's an asset so that you can go and purchase what you need to buy.
Exactly. So and there's no other way for us to know what you're qualified, because that's the number one way. And the beauty is, if you really want to buy a house and you need the financing, you have 30 days to start shopping. So determine, okay, I'm doing this. I'm going to talk to Kristel. I'm going to talk to this person. I'm going to talk. If you feel like you need to speak to several people, it's not every time that your credit is pulled that is actually bringing your credit score down. One hard pull is actually good for, let's say, 30 days, unless something happened in the middle. But there's a rule where they allow you to shop around. So once you know what your credit score is, and at this point, let go of credit score, because it's not accurate. You now know what your credit score is. And when you speak to different lenders, you say, listen, this is my credit score. Do you have a program for me? Great. Let's try to see what you can do. If you don't, I know what my score is. So I think sometimes it's that personal work that people have to do of letting go of their fear. Or I want to say, actually, letting go is easier said than done. It's going through it. It's facing your fear. It's really just going through it. And knowing that you have someone that you can give you the support to go through it.
Exactly. Well, thank you so much, Kristel. Thank you for introducing this new program. And please come back. Every time you have something new that you can share with our audience, it's most welcome. Thank you for being willing to come and do that. I appreciate it 100%. And guys, thank you for tuning in for another episode of Building Connections Doral Talks. I see you next week. Bye.
Thank you. Bye-bye. So it's Kristel Caniquitte. You can Google me, Kristel Caniquitte, and you'll find my information. However, you can also set up a time on my calendar, and we'll put it in the comments. And it's calendly.com/my name, Kristel-Caniquitte. That's the best way to connect with me. And I am on all social media, so you can connect with me that way. I'm also looking for my office number, because I really just know my cell phone number. There is a 321 number that you can dial, which is 321-214-5479. When you don't dial that number, it's like, oh, yes, I say it again, 321-214-5479. And I'm laughing, and I just want to say, I know sometimes with life transition is challenging, but just know that I'm always wanting to bring lightness into everything, because yes, being told no is not easy when you're afraid, or maybe the line of credit did not get you what you expected. But I'm here to help you, and I'm here to do it with the best attitude possible. Joy and connection are my intentions for this year.
Yes, and then also it's funny because it aligns with the new name of the podcast, which is Building Connections Doral Talks. And I just want to let you guys know that is live, and in live events, these things happen. So now I will see you next week. Bye, guys.
Bye-bye. Thank you.
Real quick, calling all Doral professionals, entrepreneurs, and community influencers. Are you ready to showcase your business, share your knowledge and experience with our engaged audience? Building Connections Doral Talks invites you to become a guest speaker on our podcast. Share your unique perspectives and inspiring stories with our listeners. We believe in the power of your voice in shaping that conversations right here in Doral. Click the link below to submit your information and be part of our next episode. Join us in building connections, sharing knowledge, and growing together. Don't miss this opportunity to be a featured guest on Building Connections Doral Talks. Tune in, connect, Share and grow together with Building Connections Doral Talks, reshaping the way we engage with the diverse voices of Doral, one guest at a time. Doral Talks, your voice, our community. Click the link now on the show notes, the screen, or in the comments below, or just scan the QR code to submit your information as a guest. I hope to see you soon. See you in the next podcast. Bye.